Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at Verified Investing, and we're going to get into all the details today about what the market is doing, what trades are in motion, where we can potentially make some money, as well as going over the macro data. And again, there's a lot of interesting things going on. In fact, there's a revision today for the BLS, which is the labor statistics, that is likely to show that the U.S. has gained a negative 1 million, or at least 1 million less jobs than reported. And again, these are these big revisions that kind of, if you're just walking around and you're just a normal person in the economy, you probably kind of know that these numbers were getting overstated. But again, just some information for all of you. You know, Verified Investing tries to bring you the honest truth based on the data, and that's what we're doing here. All right, Target earnings this morning, that was a big deal. The stock is up big, but this is the kicker. The company said they had to lower prices on 5,000 different household goods to get people to come in and shop. What does that tell us about the macro economy, the consumer? I think we can all jump to conclusions on that one. All right, let's get right into it here, folks. Taking a look at what the market is doing on a pre-market basis, we can see that in general, this is where we closed yesterday, right in this vicinity here. We are trading up ever so slightly in the overnight. We're into the pre-market session here with about 27 minutes until the opening bell. So we are just net positive slightly. Yesterday we had our first down day in 8 days, but remember that this market has been on a rip-roaring rally. Even the down day yesterday, as I discussed in Trading the Close, was very, very small because there's no volume in this market. Late August, and everyone is waiting for that Friday big speech by Jerome Powell for all of his guidance on where they're going to push interest rates into year end. All right, so again, small little movement there to the upside on the S&P 500. Just take a look over here. These are the kind of the big deals for today. We didn't really have any pre-market information or economic data, but what we do have here, folks, this is that payrolls benchmark at 10 o'clock where we're going to see these revisions. And again, it's supposed to be revised down about 1 million jobs, which is pretty remarkable because, you know, the market has been moving on these stronger than expected jobs numbers. But if you subtract out 1 million, it basically puts us as like gaining, you know, somewhere in the range of 50 to 100,000 jobs a month, which is a far cry from the 200,000 that, you know, in general we've been seeing these numbers come in at on average. 20-year bond auction. Watch this, guys. The reason why the bond auctions are big is because it tells us how much demand is out there for U.S. debt. So what we've seen more and more is that many countries, many players that buy the U.S. debt are starting to shy away from it just a little bit because, again, they're looking at $35 trillion in U.S. debt and saying, wait, what the heck? Am I ever going to really get paid back on this 20-year bond? We don't know. Or what's the value of it in realistic terms based on the dollar's value at that time? That's another question mark that we're all looking to figure out, but we kind of know the answer to that one as well. Lastly, we have the FOMC minutes right here. The FOMC minutes will only be a blip on the screen. Normally, this is a decent economic number that comes out, or at least it's content. It's information from the last Fed meeting. But because everyone's looking to Friday's big announcement or big speech by Jerome Powell, this is only going to be a slight blip. You know, even if they say something that kind of makes the market uneasy, the market's going to say, oh, well, we'll ignore that and we'll just look for that bigger speech on Friday. So just want you guys to be fully aware of the three things that are coming out: 10 a.m., 1 p.m., and 2 p.m. Eastern time. All right, so that gives us a little update there on the keys to watch for. I do want to flip over to the daily chart here on the S&P 500. And again, if we bring this up, I just want to erase this data here. But basically what we can see is we've had this huge move up in the S&P 500, right? I mean, incredible move to the upside, about 10% rally off of about a 12% drop in the S&P from the peak to the trough. Now, that's a very powerful move, but one of the things that I've been talking to you guys about is I always try to bring you guys the things that mainstream media is not talking about. And one of the things that I have not heard mainstream media talk about is what's happening with a lot of the ancillary things: gasoline, oil, and even the 10-year bond. So I want to go through this real quick with you guys. So this low was August 5th, right? So AUG, we'll put that, and that's the 5th. All right, so remember that date right here. August 5th was this low. And since then, we've basically gone straight up on the S&P 500. The thought process behind this rally is that everyone here was thinking, oh my goodness, we're going to have a recession. The recession's going to hit tomorrow. Oh my goodness. They were freaking out what's going on with the Nikkei, all of this stuff out of Japan, and that was crushing the markets. Now it turned on a dime, and all of a sudden, okay, soft landing, no landing at all. The Fed has this totally under control. The Japanese central banks handling their issues. They've backed off. The markets have ripped higher. Everything is awesome, according to the stock market. But again, what I've shown you guys is that oil is telling us a different story. And remember, oil is bigger traders than mom and pops that are buying the stock market right now in late August while the big institutions are on vacation. Here's oil's low, August 5th, right? This is the 5th of August as well. Low pivot, starts to rally because the idea is that the stock market, or at least that the economic data is showing us a little bit more strength. But then why is oil rolling over? Something is amiss there. Okay, so that's just one factor. No big deal. Let's go on to the next one. What about gasoline? Gasoline. Now, gasoline is a great economic indicator. The reason why gasoline is so important is because it literally tells you how many people are driving to work, right? If demand for gasoline is falling, it's telling you people maybe aren't going to the mall as much, to shop as much, they're not taking their car on vacations as much, all of these type of things, including jobs. You know, if jobs are shrinking and more people are losing their jobs, then gasoline would go down. Well, guess what? We have a major wedge pattern here that's lasted since 2022, and we have just broken down and confirmed to the downside on gasoline. To me, when I look at this, I say, uh-oh, this is likely headed much, much lower. So gasoline is telling us that. Okay, so gasoline and oil, all right, we'll just say okay. But then what about the 10-year yield? Wait a minute. So the 10-year yield, you know, in theory, if the economic picture is what the stock market is telling us, which is, hey, we're going to go back to all-time highs, soft landing, no landing, everything is fine, jobs numbers are okay. Well, okay, so then why isn't the 10-year yield continuing to go up like this versus going up for that first bit? This is August 5th again, so the low is August 5th. So initially, yes, things weren't as bad as they looked when we were down 5-6% on the NASDAQ on August 5th, the morning of August 5th. But yields were going up. The stock market continued. Yields are now curving back to the downside. And again, using logic, and I'm a big player on logic, it's what kind of keeps me away from getting sucked into the hype and the nonsense when you just look at the data. But essentially, you think about it like this. If the economy's fine and we're not going to go into a recession, well, then the Fed maybe will cut once or twice in the next 6 months, but that's it. Okay, so if that's the case, then the 10-year yield should be up here because that's where, I mean, again, think about 2 rate cuts from here puts us basically at 5% on the 10-year. Even if they do 4 rate cuts of 25 basis points, it still puts us at 4.5. But yields are starting to curl over, and the bond market, always remember this, guys, the commodity market is big. The bond market is even bigger. It's the biggest players. It's the smartest institutions. They are in the bond market. And if the bond market and the commodity market are curling over, what do you think that tells us about the likelihood that the economy is weakening? So just a few little tidbits there, guys. But these are little insights that, again, it's the difference between institutional money knowing this stuff, I mean institutional money very clearly, and retail. And my goal here at Verified Investing is always to let you guys know the inner workings, what's really going on behind the scenes. You guys can take it or leave it. You can say, oh, Gareth doesn't know anything, or you can say, okay, this is kind of interesting information. Totally up to you, but I'm just presenting it to you guys so you have this information at your disposal. Okay, on to some charts here in the pre-market. Target is surging. I kind of covered this earlier in the opening segment here, but the key on Target is this, is great move. So the stock has been beaten down. If you compare a chart of Walmart and Target, they are like night and day. Walmart's gone up and to the right like this, and Target's like this, right? So in all fairness, Target was due. It was the expectations were extremely low going into earnings. Now, the kicker for me, when I look at a macro picture and I say, okay, well, the stock's up a lot because it was beaten down. They did definitely beat earnings. They beat revenue. That's great. But what did the company say? Well, the CEO said, hey, you know, so what we had to do was we had to cut prices dramatically on thousands and thousands of goods to lure people back to come shop at Target. And for me, I say, okay, well, let me extrapolate this out. Let me take it from step one of cutting prices to saying, okay, well, where is this in a couple years, and what does this tell us about the consumer? The consumer obviously is not going out and spending without caring about prices. Otherwise, they wouldn't have to cut prices. So the consumer is being more frugal, being more careful, pinching pennies, if you will, probably because their financial situation is struggling. And also, how sustainable is it to keep cutting prices? So you're luring customers right now, but if the consumer starts to struggle even more, they're going to have to cut prices even more. And all these other companies, these other retailers will have to cut them even more as well. Again, my point is that good for Target today, maybe not so good for the rest of the retail sector and Target in 6-12 months from now if the consumer continues to struggle. Because eventually margins are going to get really, really razor thin on the goods that they're selling if they keep cutting prices. Now, having said that, let's look at the chart on the daily. You can see a trend line. Look at this trend line. Just remember that trend line right there. And if we go to our daily chart and I zoom out, this is where that trend line is. So that lower one right here, let me just zoom in a little bit right to there. We'll bring it right over here. Bear with me as I kind of just zoom out. There we go. So what we could see here is that trend line on the 10-minute chart that I was showing you with the big move on Target. That was this trend line right here, which is a fascinating one because it goes back to this point to this point. If you take this point, and connect it to this high, guess what? We're right below this line right here at 168.25. So at least in terms of resistance on Target, 168.25 is the level that I'm watching initially today when the market's open. Now, if we do push through that, there's really no major resistance on this till about 178 to 180. The way I'm getting that 178 to 180 level of resistance is very simple. This high pivot matches this high pivot, which matches this. 3 in a row. Take a line, stretch it out. It actually matches right here as well. And therefore, we can extrapolate using logic and common sense that if Target surges up to this level, there's likely at least some sort of pullback in store at that point, right? Makes a lot of sense. Look at every time it hits the level, down, 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 right? Down, so just extrapolate it out. Extended move vertical up, you expect to pull back there. Now again, these are shorter term moves, day trading, swing trading, but nonetheless, that will be a level to watch. All right, Macy's. Macy's reported earnings, not so good, right? So again, you know, we talked about how Target had to cut prices dramatically. I'm not sure if Macy's did the same thing, but it didn't work, needless to say. Earnings not so good. The stock again closing yesterday around 1780, trading at 1580, down that's about 10% give or take on the stock. But needless to say, the question is at 1580 to 16 bucks, is there a tradable level? Let's flip over to the daily chart. So we're down on the day, and first thing I see is a gap fill here on the charts right here at around 16 bucks. Now the fact that we're already there, I'm not going to trade it there. It has to go lower. After that, what level do we have? Well, we basically have a double bottom right down here. And again, right here, I would take this line, just stretch it right over, and it looks like it's right around that, just below $15. So if you get a flush today, or if I see a flush on Macy's and it pierces 15 today, there might be a day tradable bounce. We look at that, comes down into double bottom. You maybe get a little bit of a check back there, a small bounce for a potential day trade. Now, would I swing trade that level? Probably not. I'm just going to be honest with you guys. I don't trust this economy any further than I can throw it, which isn't very far. I still am very concerned that the markets are going to start to reflect, and we've already seen kind of some skittishness based on the last couple of weeks. Yes, you're seeing this incredible rally back, but the signals that I'm seeing, the economic data, the numbers, the comments from CEOs, very, very concerning, and therefore I think I'll stay away from Macy's in terms, even at double bottom as a swing trade. Day trade, different. I'm in and out intraday. That's doable. Swing trade, I'll pass on. Okay, next up, I wanted to quickly take a look at this chart on the SMH. I think this is a fascinating chart because, again, it shows you where we pulled back yesterday. Now, listen, right now, Nvidia is flat on the day to positive. A lot of these stocks are doing okay today. Again, we'll see where they go. But look at the bounce. If you take a Fibonacci retrace tool, right, which, again, you take the high right here, okay, the high here, the all-time high, which was a reversal engulfing candle, to the low, which was actually, look at that candle and look at that. They're almost identically opposite. The same size, just inverse. And you can see how this candle told us of a down move. This candle told us of an up move. Again, see that? That's pretty cool, actually, because they're literally, I bet if we match them up, they're within pennies of being the exact same size. My point is, when you do Fibonacci, my favorite Fibonacci retrace is a 618 retrace. And again, that is exactly what we hit right here before this little check back. Now, in all fairness, can we go through it? Yeah, I mean, if the market keeps floating over the next few days, even into next week in late August, markets could float up. We know that. So it could go through, but you generally respect the 618, and generally you get a pullback. We did yesterday. The question is, will we get that pullback again today? All right, so that's something of interest here that I wanted to point out to you guys on that chart. And then just to quickly check in on Nvidia, I think this is fascinating because Nvidia, notice how you closed above these two lines, and then look at yesterday's daily candle right here. It might be a little small for you guys to see, hopefully you can, but look at how you closed above, and then yesterday you kept on hammering on that zone intraday, and it didn't close. It basically kept it a buoyed to the upside. And that's just fascinating in terms of what that tells us. So what does that tell us? Well, what it tells me is that as long as you stay above, there's a chance that you get some further upside. Very clearly, we hit this line, these two lines yesterday a couple times intraday, and we bounced up. If, however, if we close below, there's a lot of downside there. There's potentially downside a significant amount. So essentially, watch this zone. It's right around, looks like 126. A daily close below 26, that would be a red flashing warning sign for further downside. But as long as it holds a daily close above 126, it might float up a little bit more. Is it overbought? Yes, and there's no doubt about it. But stocks can remain overbought for long periods of time, as we can see in many situations. All right, guys, so what I want to do now real quick is we usually take a quick break and we do our spin, our going through to see who won yesterday. It was Smart Money Crypto. Instead, I'm going to do a video later announcing the winner with some other content, so appreciate that. But without further delay, I do want to spin the wheel to see what we'll give away tomorrow. But someone later today will win the Smart Money Crypto. All right, over here, let's go, guys, and let's go right here, and we'll do our spin. Oh, cool. Look at that, 1 minute scalpel, Dr. B's course, guys. And this course is incredible. In fact, it's revolutionized how I trade intraday. Not only do I still trade the way I've always traded, which has made me money, but introducing the 1 minute chart analysis that he goes through literally changes the game in terms of shorter time frames when you can start to expect moves. It's incredible stuff. And again, we'll give away that course tomorrow. 3-month access to Dr. B's scalpel, 1 minute scalpel chart. And yes, he is an actual doctor. So that is always, people ask that sometimes, is he really a doctor? But yes, emergency room surgeon that has now switched to trading. Very cool. His knowledge is incredible on this. And again, we will go through this and give it away tomorrow. Now, we're going to take just 30 seconds to quickly thank one of our amazing sponsors here, Lux Algo. Remember, Lux Algo, guys, is on the data side with us. And I always look at this as being like, there are a lot of companies out there that feed off of hype and emotion, and they lure people in, like the mainstream media. It's all about fear and what's negative, and oh my goodness, let's rile everyone up. Verified investing, I just want us to tell you the data. Sometimes it's good, sometimes it's bad. It is what it is. That's it. And that's what Lux Algo does as well with their indicators. And I have an indicator on there as well. You can find it on our website under our AI and Algo tab at the top of the website. It basically tells you every time there's going to be a pivot in a chart based on specific criteria. It's incredibly useful if you're a trader. It works on daily charts, intraday charts, you name it, it's all there. So let's take 30 seconds to thank Lux Algo for being an amazing sponsor.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, we are back right into the Bitcoin chart. I know you guys are waiting for Bitcoin here, at least some of you guys are. And essentially what we have here is just a chart that's being patient. And again, this is where I was talking to my Smart Money Crypto members this morning in a video that I put out this morning for them. And I was saying to them, listen, this is still a short-term little bullish pattern here. You have a wide range green candle with lots of inside bar consolidation inside of this low to high candle. Now, in general, that's bullish. But inside of my methodology that I teach, which I call the PPT methodology, price, pattern, and time, PPT, the time factor is a very important factor. It's an underrated factor by most investors and traders. And what you're getting into here is where this is taking so long to play out in terms of a move up that you have to start to be a little concerned. Now, right now I'm still okay with it. It's still bullish. But if we don't get a move out of Bitcoin by early next week, I would actually start to be nervous that it's going to start to fall back down to this level. Now, once we get down there, hopefully it holds, but that will be an ultimate level. But again, the time factor is something. When you have a chart pattern, like a head and shoulders pattern, right? A head and shoulders pattern, it should be pretty symmetrical, meaning this side could be a little bit bigger here than this side. That's okay, but you don't want a head and shoulder pattern that looks like this, right? Like that's not, like when you look at the human form, that's not how a human is built. And in general, it can be a little off. We all have little differences in our bodies, but that's not a good one. So that's the time factor that if you see it like this would be concerning on a head and shoulder pattern. This would be like, oh, wait a minute, this isn't a good pattern formation. So I just want to point that out to you guys. That goes with every sort of pattern in technical analysis is that it has a stated time. It's almost like a ticking clock, like tick, 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 where it has to play out in a certain amount of time. Otherwise, the failure rate starts to exponentially expand in terms of that not working out. All right, so in any case, we'll keep an eye on Bitcoin. Right now, still an inside bar action, inside of a bigger bullish channel, but we need to see it play out sooner than later. Next up, gold, guys. Gold isn't doing a whole lot. I showed you the logarithmic chart with my upside target yesterday, which is 2660. Again, part of me still thinks there's due for a pullback first before we get this move. But ultimately, again, when I came in this year, guys, I said, guys, we're going to hit 2,500. We were only at 1975 to 2,000 at the time. But I said, listen, 2,500 is my target. Well, let's hit that. Now I'm revising. I don't know if year-end. I'm not going to lock myself into year-end 2660. But I do think by early 2025, we're at least into that 2660 level before it starts to really have a pullback in the zone. And again, this isn't the logarithmic because it doesn't connect through. If I flip over to logs, we can see it here. There we go. That's your 2660 level right up here. You can see it's exactly this high on the logarithmic side right there, and then this would be 2660. Okay? All right. Silver on the day today. Last I checked, it was up just a little bit. Let's flip over to silver and see what silver has. Now, silver, again, it's had a good run here. I am looking potentially for a max short-term upside move to about this 31 level. Down-sloping trend line. Again, I drew this on for you guys yesterday as well. But right in this zone would be your max upside, and then you'd expect some sort of check back to this zone, right? So me being long silver, or SLV, which is the ETF that tracks silver, if we get up in this range, I unload, and I look to reload here with a small starter position, and then maybe down there if it gets down there. But hopefully, or I don't know if it will. It's just the economic side of industrial. The industrial metal is a concern. Lastly, quickly on natural gas, guys, just going into natural gas. Yes, 2 days ago, it closed above the level. We know we don't trust closes above. Don't trust, right? That's the key. When you close above a level, it could be a fake out. It's faked people out multiple times, but never closed above. Here it closed above, really trying to lure you in. No confirmation yet. And sure enough, we're trading back down. So be very wary. And this goes with every chart, with every asset class. You close above, what's the natural thing? I still remember when Bitcoin got above 65,000 in 2021. People just went nuts, and it never confirmed. Even though it went to 69,000, it never confirmed. What happened after 69,000? 15,000. So I'm just saying, the methodology that I've got here for you guys is unbelievably important. It's not perfect. There's no perfect solution, but it is very, very important to keeping people out of trouble, which is honestly 3/4 of the battle. Like, if you could keep me out of the few bad trades that I've had, I'd be millions of dollars richer, to be honest. That's the key, right? It's not so much how much you make, it's how much you don't lose. And that is the important thing that people have to remember. So learning techniques that keep you away from thinking, oh, that's a breakout. Oh, wait a minute, it might not be. It didn't confirm yet. Those are the keys to many people that bought Bitcoin above 65 before it went down to 15. And unfortunately, a lot of them panicked down in the 20s and the 15 area and unloaded it. All right, in any case, enough of that, folks. Don't forget, we got that jobs data revision number today. We got the FOMC minutes today. The 20-year bond auction is later. I'll cover a lot of this in Trading the Close today at 3:55. I hope to see you all there. Take care.